The United States of America has joined every other country in the world in repatriating its gold. To what ends, we're not sure. Could it be for a monetization of gold using a bond type of product? Yes. Every country in the world, the ones that we've seen, the ones that tell us, mostly Eastern Europe and the BRICS, they have been buying or repatriating gold, right? So China has been buying gold hand over fist. In some months, 10 times more than they announced publicly.
Gold prices have been setting record highs this year, continuing their relentless rally from the previous year without any significant pullbacks. As one of the most trusted safe haven assets, gold has attracted strong demand from all market participants, including investment firms, central banks, and retail investors. This surge has resulted in one of the most impressive rallies since the COVID-19 pandemic. According to the World Gold Council, WGC, global gold demand, including over-the-counter OTC trading, increased by 1% to a record 4,974.5 metric tons in 2024. The report also highlighted that central banks accelerated their gold purchases in the fourth quarter, further fueling the rally. Donald Trump's victory in the U.S. presidential election has boosted gold prices, as investors remain wary of his trade policies and pro-growth agenda. In response to Trump's announcement of a new 25% tariff on steel and aluminum imports, financial markets reacted sharply, pushing gold to a fresh all-time high while driving up aluminum prices. VinceLanci, however, argues that tariffs, while a potential catalyst, are merely a cover for a much larger shift behind the scenes. He dismisses the idea that tariffs are the primary driver of gold's sustained price increase, suggesting that while they may have briefly influenced gold flows into the U.S., they do not explain the metal's prolonged strength. Instead, Lanci points to a broader global trend. Nations, including the U.S., have joined the growing movement to repatriate their gold, signaling a strategic realignment of monetary reserves. Join us as we dive into the video for a deeper look. Don't forget to subscribe and click the bell icon to stay informed about our latest updates.
Tariffs do not explain the price of gold going up in one area and not in another. Now, I know that that was held out to be the reason in the beginning, and for good reason. If you're, without going down too many rabbit holes, if there's too much gold on the COMEX that's stamped with, let's say, Mexico or Canada, and you have to make delivery of that, well, then you might get slapped with a tariff. And that story became a reason to swap out your gold or swap out your silver. But it's persisted and it's increased, even though the likelihood of tariffs has not. So there are two things going on here. And empirically, the information that if anything, tariffs are a catalyst that end up serving as a cover for something bigger going on. Now, I don't know that it's going to be a Lehman moment. It almost never is in metals, but I do know that the important players in the market, and by that I mean the LBMA and the bullion banks, they're not happy if the price of gold goes up. And that sounds obvious, right? But what I mean is they'll do everything they can to short circuit impulsive demand. So the gold market, they don't care if the market, I mean, I'm simplifying. If gold goes to $5,000, they don't care. They just don't want it to happen in 2 days. And so they'll slow it down. And things like lease rates, which we're going to talk about, right, are EFPs. Those are safety valves that the public doesn't see. And so as long as they can move higher without the gold price moving higher, you're kind of letting off steam of the problem. However, the gold price is moving higher, and the math says that it should be a lot higher from here. But the short version of the answer is tariffs are not a reason for the price of gold to go up in the world. They may have been a reason to bring gold to the U.S. In a little bit of a flurry, but they are not a reason for gold to stay high now. No, they're not. Trump post Trump winning the election. All right, so let me just focus on your picture here. The gold leaving Europe coming to the U.S. is not because of a tariff. It's going into GLD, it's going into SLV. The Bloomberg headlines are like the opposite of sensational. They are, and I'm not even wearing a tinfoil hat here. I'm just talking about the economics of how the market works. The Bloomberg headlines are effectively gaslighting people. Bank of England gold is at a discount. And so the rest of the world is stupid for buying it. That's one of the things that will come out of those headlines. But going to the actual metal being delivered, look, tariffs are, just starting with tariffs and working towards what I think is going on. Well, what I do think is going on to start up front is that the United States of America has joined every other country in the world in repatriating its gold. To what ends, we're not sure. Could it be for a monetization of gold using a bond type of product? Yes. Could it be in anticipation of someone else using gold as a monetary unit like the BRICS, and so we want to get our gold out of there to make it not available for them? Yes. Could it be for, literally for making coins? That's what happened in 2020. Yes, you have to buy COMEX gold, so you end up pulling it from Europe so you can make blanks to make these things. Yes. Could it be we're going on a gold standard? Highly unlikely, but sure, you can count that. So with Judy Shelton out there talking about these things, and you have all this gold coming back, I think the tariffs are a cover. I think really what's going on is, it really comes down to what happened post-COVID. Every country in the world, the ones that we've seen, the ones that tell us, mostly Eastern Europe and the BRICS, they have been buying or repatriating gold, right? So China has been buying gold hand over fist. In some months, 10 times more than they announced publicly. So they'll buy 5 tons, out of London, right? And then they'll buy 50 more tons OTC as Goldman has started sharing with us. Then you have India repatriating its gold from England, right? This started 2017. It started 2013.
Germany said, right?
Yeah. Right, you got it. Germany said we want our gold back, and we said we need 6 years.
The CME COMEX is the primary exchange for trading futures contracts on gold, silver, and other commodities. Over the past 2 months, an astonishing 500 tons of gold, equivalent to 40,000 good delivery bars, have been discreetly delivered to the 9 COMEX vaults, predominantly controlled by JP Morgan Brinks and HSBC. As a result, the total gold stored in COMEX vaults across Manhattan and Delaware has surged to 1,400 tons, equivalent to the entire gold reserves of Switzerland. VinceLanci describes these acquisitions as elephant moves, massive purchases that suggest a significant shift occurring behind the scenes. Where is the gold going? He asks. Is it being sent to the Federal Reserve, the U.S. Treasury for coin minting, a GLD vault that could potentially serve as the new COMEX storage facility? Lance believes these unprecedented inflows indicate a deeper underlying motive. Now, let's redirect our attention to a video.
When the London gold pool scheme failed, we created futures. And the idea was the physical would stay in London, and the COMEX, which also was a physical exchange, would suck all the liquidity for financials. And most people won't take delivery. And so, as I said, 10 contracts are shorted, maybe one takes delivery. Now, the nuance, but even more interesting thing to me is, not only is the volume amazingly too high for delivery, it's coming in a contract month that, generally speaking, doesn't have high volumes to begin with. So, for example, the deliverable months, every month is more or less deliverable now, but the most important deliverable month in COMEX, for silver and gold overlapping, is December. The February contract is the dregs. You follow? In silver, it would be the March contract. So December is the only, if you look at the board, if you're a futures person, you'll notice that every month in the COMEX alternates. So February is liquid in gold, March is liquid in silver, April is, they alternate because they don't want to have any delivery problems. But December, they both have a December contract, and that's supposed to be end of the year, clean house, everybody gets, and everybody makes delivery. But here we are in 2025, and they're doing it in February. And they've already kicked this out for a long time. Even as I speak with you about this topic, I'm growing in being convinced that the JP Morgans of the world know that they can use their gold as a tier 1 asset going forward, Basel III will be implemented. They need to have their gold back unencumbered, and that's, I'm giving it more than when this conversation started, I'd say it was a 5% chance. Now I'm giving it like a 25% chance. I think that's what's happening. Why else would you take delivery of the gold? That's it. I don't know what else to say. It's just, it's happening. The word you used is elephant. These are massive elephant purchases. And where is the gold going? Well, where is the gold going? Is it going to the Fed? Is it going to the Treasury to make coins? Is it going to a GLD vault? Because GLD is going to become our COMEX. It's going to become like where they store the metal, I think. Wherever it's going, it's coming to the U.S. And that's the contradiction with the tariff thing. If tariffs are a risk, then everyone should be buying gold before it gets tariffed in other countries. Instead, we're buying the gold. Oh, they're going to be tariffing? Why is gold going up in New York? It should be going up in other countries in anticipation of the New York price.
Market analysts anticipate that gold prices could reach $2,900 if the current momentum continues. Looking further ahead, projections suggest that the yellow metal may extend its rally, with some analysts previously forecasting prices as high as $3,000 to $3,300 per ounce by 2025. Adding to the bullish sentiment, Donald Trump's proposal to impose a universal trade tariff of at least 10% on all imported goods, including gold, has prompted traders in New York to demand physical delivery of gold futures contracts from London. Do you think gold will surpass $3,000 per ounce in 2025? Or are these price targets overly optimistic? Join the conversation. Share your thoughts in the comments, give us a thumbs up if you found value in this video, and subscribe to stay engaged with our community.